Well, hey everybody, here we are on April 21st. I've actually tried a couple times to start this video and unfortunately I've been getting interrupted. But in the meantime, I just want to go over a few statistics that the real estate board sends out to us. I'm going to show you some indicators that will let us know that the market might flatten out as far as pricing goes. I think the volume of activity is probably still going to remain quite strong. And then from there, I'm going to talk about some things that are happening outside of the statistics that we see on a regular basis that might give you a little bit more comfort in understanding where we might be headed. So this is the housing price index right now for Squamish, and as you can see, we're on an absolutely parabolic trajectory. Parabolic means it's going like this. So that's the swoop we're in right now, as you can see by the top here. 862,000 for all property types, which is the highest it's ever been by a long way. Sales prices are going up. Days on market are down. Now, what's interesting is we're down days on market lower than we've ever been since back here in 2018. It has not been like that for 2 years. So if this is a glitch and the days on market goes up a little bit, that benefits the buyers. So we'll have to watch that and see what happens. Total inventory, this is another one that was pretty scary because we haven't seen this for 2 to 3 years. So I'm going to go back 5 years and just see. See, there was a couple of dips here where inventory went down this low in December, but we're talking about inventory here in January being as low as that. March we're climbing a little bit, but I think you're going to see that taper off because there's been a bunch of solds that have not been reported yet. So total inventory is at a real problem. This is the light we're seeing here, though. Total listings coming on the market are at a peak. This is the highest rate of listings we've seen come on in a short period of time. So what that does is, although the inventory is going down, new listings are coming on, which is going to cause the total inventory to rise. And the buyers that have all been brought forward into this first 3-4 months of the year are now no longer waiting in the second half of the year to buy. So we might see ourselves with a little bit more product in the market with a little bit more time taken in order to sell properties, which will prevent as many multiple offers from happening as we've seen recently. Number of sales obviously dramatically up from same time over the last couple of years. And even if we go back 5 years, sales are the highest they've ever been. So there we were in 2017 and back in 2016 with 99 units and 101 sold in March of 2021. So crazy numbers we're seeing out there. Sales to active ratio, obviously the sales to active ratio is just soaring because we're not having as many listings come on now. If that sales to active ratio continues to climb, then we're going to have a real tough time keeping up with inventory. But more inventory comes on, more sales are happening. That ratio's got to come down a little bit in order to stabilize the market, and that's probably what we'll see. So that's from a statistical standpoint from the real estate board as far as what's happening. But there's a couple of things I wanted to mention. Now, this is actually Better Dwelling, which is one of the I say newsletters. It's a website that I frequent quite a bit. They've got quite a bit of information on here. And one of the key things was the Bank of Canada spoke earlier today and released guidance that interest rates wouldn't rise until 2023. However, they did indicate that if the rate of inflation exceeded 2%, their target, that they might be forced to bring that forward a little bit into 2022 and see interest rates rising at that point. Now, the interesting caveat to that is that the Bank of Canada also said that they are going to reduce their bond buying by 25% effective right away. Now, when they reduce their bond buying, what that does is it causes interest rates to rise. So they might be actually using the tapering of quantitative easing to cause the interest rates to rise without actually having to change policy to see the rates rise. So I think you're going to see that happen by 2022. So for those of you that are in mortgages right now, you might want to consider the possibility of locking in. The long-term effect of that is questionable, but we're at all-time lows in interest. Well, not all-time lows. We're at lows relative to what they were 4 or 5 years ago. But I think the interest rate's gone up slightly over the last few months. But Typically, we're at an extremely low interest rate, and the only way for it to go is up unless we have another economic catastrophe. If there's another COVID situation or anything like that, they may be forced to reduce the interest rate again. But at this time, I don't think anyone's calling for that. Everybody's calling for interest rates to gradually go up. So locking in or going for a 5-year mortgage is not going to hurt you. It's just going to protect you on the risk of interest rates going up. So if you're to take a 5-year term right now, it's probably not so bad. You might benefit if there's a catastrophic event and interest rates go down if you had a variable rate, but I think the benefit on the variable side isn't probably worth the risk that you have on the upside. So that's sort of an interesting factor. Now, I did have lumber prices up here, but I seem to have taken them off. Oh, there's my lumber futures. So this is a staggering chart. You can see here, if we look at the last 5 years of lumber prices, there was a spike back here in 2018, then it tapered off and stayed low, and we were down around $200 to $400, and it's gone all the way up to $1,200. Now, a couple of days ago, it was actually at $1,385. So lumber prices may have peaked, and we'll be interested to see whether or not we get a continued fall off in lumber prices or whether it's just a drop back down only to accelerate back up. But if we go into the sort of 1 month perspective, you can see here was the high of 1374, and lumber prices have come off of that a little bit. So whether they continue in the trajectory up, this has been again another parabolic move. If we get a movement down, and if it comes and cuts below the 1100 or especially the $1,000 mark, then it could be in for quite a free fall, which will help all of those that are trying to build houses. But if that falls, then the cost to build goes down. When the cost to build goes down, then there's the more profit built in it for people that are building houses, which then is going to allow prices to come down in that sector as well. So a little bit more inventory hitting the market. Lumber prices seeing a bit of a peak. Whether or not they fall off, time will tell. As well as demand having been pulled forward to the beginning of this year, and now there might be a little bit less demand going forward, albeit Squamish is a phenomenal place to live and people still love it here. But do keep in mind that demand has been pulled forward quite a bit. So those factors are going to lead to probably stable prices in the coming months, and hopefully we'll have a fantastic summer and we'll all get through the vaccination of COVID, and hopefully we'll have a good summer. So I think that's it for now. If you ever have any questions about the real estate market or what seems to be happening, by all means, give me a shout, 604-892-8155, and I'm happy to discuss it with you. Take care and have a fantastic, springtime, I guess. Take care. Bye for now.